Hello, and thank you for joining us today. My name is Luke, and I work in the legal team at Hazelwoods. We specialise in providing accountancy services and advice to law firms. Today, we will be discussing residual client balances. When we speak about residual client balances, we mean the balances which are covered by Rule 2.5, which reads: You ensure that client money is returned promptly to the client, or the third party for whom the money is held, as soon as there is no longer any proper reason to hold those funds. The money being referenced to here is the residual funds held at the end of a client's matter. This rule directly relates to your file closure procedures and ongoing due diligence with what funds are held in the client account. As your file closure procedure or archiving procedure should always ensure client's money has been returned at the end of a matter. These procedures being done in a timely manner will ensure that the client money is easily returned. The obvious reason for this is you would have just been in contact with the client and may still even have their bank details to return the funds. Your ongoing due diligence on the money held on the client account should also ensure balances are not being held unnecessarily, as running regular aged client balance reports will identify older balances, which should then be dealt with. Picking up these balances early will make finding clients more likely, because as time goes on, clients may move or change their contact details. So, an ideal situation is for the money to be returned to the client. But what if I can't return the money to the client? In some circumstances, it will not be possible to return the balance to the client. This is why the SRA have added a withdrawal rule. This rule, Rule 5.1c, reads: You only withdraw client money from a client account on the SRA's prior written authorization or in prescribed circumstances. The prescribed circumstance link I've provided below. This rule points to the SRA's guidance on what to do with client money held which cannot be returned to the client. This is the prescribed circumstances. The guidance is helpfully on their website and includes the circumstances around withdrawing client balances where clients cannot be found. The prescribed circumstances prescribe that for individual balances of £500 or less, once you have made reasonable steps to return the balance, you can donate these balances to a charity of your choice. This means that for these balances, there is not a requirement to obtain the SRA's approval to donate the balance. As this is done on a client matter basis, you do not need to aggregate the balance. Therefore, if you have several individual balances of £500 or less, you can donate them without the requirement to seek the permission of the SRA. Also, with these balances, there is not a requirement to donate them to an indemnified charity. However, you still may wish to do this, as paying these to an indemnified charity will save you having to pay out of pocket if the client returns for their money. If the balance is either under or over £500, you will be required to take reasonable steps to return the balance. This depends on the age of the balance, the amount of the balance, if you have access to the client's most up-to-date contact details, and any associated costs with tracing the client. Reasonable steps for any balance could include searching social media, searching Companies House, checking the probate registry, or using free searches on the internet. These are all free services, as such, you should be able to use before donating balances. You must, however, not deduct any costs incurred while trying to identify the client. We will go into this further on a later slide. The SRA expects the minimum steps on balances greater than £500 should include using the DWP letter forwarding service for individuals or Companies House records for companies. As such, you shouldn't try to apply to donate these balances if you have not at least tried these steps. As the balance increases, the steps you'll be required to take will increase. For example, for much larger balances, you would be expected to use such services as a tracing agent or a local national newspaper ad. These should, however, be proportionate to the balance. For example, it would not be worth using an international tracing agent worth £1,000 if the balance is only £750. You should also be aware that internal costs, such as time costs, can never be deducted, and for external costs, such as tracing agents' costs, can only be deducted for balances greater than £500, and only with the SRA's authorisation. As such, you should never pay these costs out of the client account. As mentioned previously, you will need to consider several factors when trying to locate a client, such as the age and amount. For smaller amounts, you may consider using free services, as tracing agent fees may be larger than the individual balances and therefore outweigh the cost of tracing these balances. For even very small balances, the cost of even cheap online searches may outweigh the balance involved. The other factor you may need to consider is access to the up-to-date records. If, for example, you have inherited an older balance from a retired partner or a balance from many years ago, most of the records may no longer be held due to GDPR reasons. As such, you will not have the sufficient documents to be able to conduct a trace on a client or use a tracing agent. The SRA will expect you to make sensible decisions on these balances. As such, the larger the balance, the more intense the effort should be to find the client. In a similar regard, if you do hold more information on the client, you should use all of the information available and make a more intensive effort to find the client. For balances over £500, we would recommend looking over the Withdrawal of Residual Client Balances form. This will provide you a helpful guide to what the SRA will expect you to do before you request for these balances to be donated. You can find the address to this form on the slide. Once you're happy you've fulfilled the checklist and there is nothing more you could reasonably do to return the balance, you should then fill out the checklist to be sent to the SRA for balances over £500. We would also recommend using this checklist for balances under £500. However, you will not need to send this to the SRA. The SRA will require you to document your searches and decisions from the point you identify the residual balance up until you have returned or donated the balance to charity. It is also required that this is held centrally in a register. This register should include the origin of the balance, the client's details, the value of funds, what steps have been performed to return the balance, and ultimately where the balance has gone. This will include receipts from the charity if donated. This should also include the indemnity from the charity if applicable. This must all be held for 6 years and must be made available to the reporting accountant to check during your annual Accounts Rules audit, of course, if you require one. The SRA will consider the request on a number of relevant factors. These include the amount of money, the length of time that money has been held, the costs involved in making further inquiries, the likelihood of success of the money being returned to the rightful party, and the proposed use of the money. They will then either suggest another step to try and locate the owner of the balance and taking into account the factors mentioned, or accept the request to donate the balance to charity. The SRA's decision will be driven by the likelihood the client will be found and if they will accept the money. If ultimately they then decide the balance should be donated, the charity must offer an indemnity for balances over £500, and you must correctly account for the interest on the balance accrued according to your interest policy. This would be the whole amount of interest due from your interest policy on the balance for the amount of time the balance was held up until it was donated to a charity. As a final point, there may be other areas where you can find residual balances, as they are not only held on the client ledger. This is why it's so important to check office account reconciliations, suspense ledgers, and office ledger credit balances. You should check office account reconciliations for unpresented items, as this could represent client money that is due back to the client account and then ultimately back to the client. You should also check suspense ledgers, as these could be unknown client monies or money held in suspense for any other reason, as these balances can also be residual balances even if the client has never been identified. You should check the office side of a client's ledger for credit balances. This is where client money is potentially being held in the office account, which is at least due back to the client account, if not the client as well. You must ensure that client money held anywhere is returned to the client, as if it was in the client account. Thank you for your time today. If you do have any questions, please get in touch with us and we'll be happy to help you.